Hey YouTubers, this is Ernie Varatimus, the gold buyer, and tonight I'd like to do my technical analysis for gold. It is April 21st, 2010, and first of all I'd like to clear up some misconceptions about technical analysis and sort of put this in terms that just about anybody can understand. First of all, let's all technical analysis is done on price charts. And the two important factors on a price chart are price and volume. Price is the ultimate truth. What price is the value of that particular commodity or stock or whatever that price chart represents. Volume is the level of commitment that the investors have to that particular price. All right? And then all the other indicators that come off of a chart are really derivatives of price and volume, and they help us determine whether something is oversold or overbought. And what that means is how many buyers are able to come back into the market or how many sellers there are in the market. All right? When something gets very, very overbought, that means that we're running out of buyers. When something gets very, very oversold, that means we're running out of sellers. And price tends to move in the opposite direction when we reach those extremes. So let's take a look at the chart. This is the gold ETF, and what it's showing here, this is over the past 1, 2, 3, 4, 5, 6, 7, 8 months or so. And gold has been very happy within a range between 106 and 114. And that's evident that it keeps on bouncing off of those two levels. And the other thing is this other indicator right above it is called the relative strength index, and it shows whether or not something is overbought or oversold. When something is overbought, that means we're running out of buyers. When something's oversold, that means we're running out of sellers, and price tends to want to go in the opposite direction after that. In this particular case, the RSI is kind of hovered right around the 50 mark, meaning that buyers and sellers are pretty happy with where gold is. And there's really no indication that it wants to break out of that range that it's found, the 114 to the 106. All right? So, as I said, price and volume are everything in a chart. Okay? Price is the ultimate truth. Now, you can see that back in early December, we had a huge run-up in gold, and we became extremely overbought, which means we ran out of buyers, and naturally, because we ran out of buyers, it started to sell off. Now, when it's sold off, if you look at the volume, it's extremely high. Now, what that means is that there are a lot of people that took positions with gold at that 114 level where it ended up. All right? So those people still hold those positions, and that's one of the reasons why it is established 114 as the top of this, I guess, channel, you could say, between 106 and 114. Now, as we've moved along, we've also found support at 106. Now, if we look back in early November, we can see that there was a big run-up right at the very beginning of November, right up to that 106 level, and you can see that the volume was pretty high there. All right, and so there are people that have held that position too, and as we've gone along, it's kind of established that as good support. So that's how price finds support and resistance, by the commitment of people at that particular price. How many people took positions right there? Now, there are other indicators, weaker indicators, like the moving average and Fibonacci levels and things like that, that some people can point to as other reasons why people might find support or resistance. But they are also derivatives of price and volume. So price and volume are everything. Now, I don't see any good reason why gold should break out from here. A lot of people are saying that gold should. I really don't see anything. I mean, gold and the buyers and sellers are all in this sort of equilibrium unless we have a correction and we start moving back down towards that 106 level and bring the RSI down so we become oversold, and bring stochastic down so we become oversold there. When you get all those indicators on one side of the graph in an oversold position, then that's when gold will want to move up and move out of that range. Okay? But right now we have no such indication that will happen. In fact, there are other indicators that are outside the scope of this chart. The most important one is sentiment and something called the bull-bear spread. Now, I put out another video that talked a little bit about this. And that means that right now, currently in the market, there are many more people with bullish sentiment than there are with bearish sentiment. Now, there are a couple of other times when this has happened. And one was when we had the correction at the beginning of the year. Sentiment was up around 37.5% or so. And so subsequently, we had a 9% correction in the market, and it brought it back down. Now, when we had the huge decline we had back in 07 and 08 that started this whole huge bear market mess that we're in, the bull-bear spread was at 42%, which is geometrically higher than 37%, even though it sounds like a little bit, it acts more like the Richter scale on a earthquake. The higher you go, it starts getting orders of magnitude. Well, right now, we're at 36%, which is just 1.5% under that 37% when we had that 37.5% where we had that correction at the beginning of the year. So we're approaching a point where the bulls are far outnumbering the bears, and this market needs to correct. I mean, we've been on this tier, so it only stands to reason. And really, there's nothing keeping gold from hanging out at its position right now. So I believe we're going to have a bit of a pullback, and gold is going to find that support level of 106 before we start making any kind of advancements. And that generally goes for the rest of the market too. So that's my technical analysis. I believe if we do pull it back to that 106 or anything near it, that's going to present a great buying opportunity for GLD. So I believe, now it's not saying that we might go up a little bit first, maybe even test that 114, but that bullish sentiment, that bull-bear spread is going to really kick in sometime within the next week or two. And when it does, expect that pullback and then start looking for entry back into gold. Well, this is Ernie Varatimas, and we'll see you next time.